Hello students, how are you? Now let us start our session for the day. So far we have read about 9 basic accounting terms. Today we take up the 10th and the 10th one is profit. Up to class 10th you must have read in mathematics about profits. What is profit? For example, if a seller buys pen for rupees 10 and sells them in the market at 15, then what is the profit? We simply selling price minus cost price. That will be your profit. But in accounting, profit also means the same, but let us understand. Profit means the income of the business that is earned through its operating business, operating activities. Now the question is, what is operating activities? Operating activities are the basic activities in which the business deals. Regular buying and selling in case of trading, in case of manufacturing, regular purchase of raw material and converting them into finished goods. So this is operating activities of a business. So for example, if you are in service sector, in that case you are rendering services to the customers. So your operating activities will be rendering these services. So whatever you earn by selling your goods in which you deal or rendering the services, you get profit. Clear? Profit means income through operating activities. Okay? It is of two types: gross profit and net profit. Gross profit means net sales minus cost of goods sale. Okay? Or you can say your income that has been earned from sales less its direct cost. So we can write gross profit means net. So we can say gross profit means net sales minus its direct cost or cost of goods sold. Clear? And net profit means when all the expenses, whether direct or indirect, are deducted from the net sales, you get net profit. So net profit means net sales less all expenses. In case expenses are more than net sales, it will be a case of net loss. Clear? And similarly here also, direct cost is more than the net sales, it will be gross loss. Clear? So this is out of earned, this is earned out of operating activities. And this is total expenses. When you take into account all sort of expenses and subtract this from net sales, you get net profit if this is higher. And if the expenses are higher, then you will have net loss. Clear? Now we proceed on further. Take up 11th. Income. The income earned, the profit earned during an accounting year is termed as income. And it can also be stated as when all the expenses are deducted from the total revenue, you get income. Clear? So we can say income revenue minus expenses. Okay? Revenue minus expenses is your income. Clear? And it is broader than profit. Profit is part of the income. Income is a broader term which includes profit also. Apart from profit, there are other expenses and incomes that have to be taken into account while proceeding to find out the income of the business in an accounting year. Clear? Now we take up another. Loss means when the expenses are more than all your revenues, you will have loss, and loss will decrease owner's equity. Clear? If there is a loss due to fire, or there may be a case when goods are stolen, cash is stolen, or you can also incur loss on selling a fixed asset like loss on sale of land and building, loss on sale of furniture. So this will be all your losses. Okay? So we can say loss means expenses minus revenue. Okay? Simple. So we move on to next, and that is purchases. In accounting, we use the term purchases for the goods in which we deal, in which we trade. Okay? Which is our main point of business. Like for example, you have a general merchant shop. So all the goods you are buying and selling regularly, that will be termed as purchases. All those goods will be termed as purchases. Okay? So purchases means goods in which a business trades. And in case of manufacturing, the goods will be termed as purchases. All your raw materials that you purchase will be termed as purchases. Okay? Purchases includes both cash purchases as well as credit purchases. That means whether goods are purchased by paying cash or they have been purchased on credit, all these goods will be termed as purchases. Okay? So we can write goods in which a business trades and includes cash purchases plus credit purchases. Okay? Now next is 14, purchase return. Purchases returns. As the name suggests, the goods, the purchases which have been returned will be termed as purchases returns. Due to any reason, there may be a fault in the goods. There may be the goods are not up to the mark. So you will return those goods to the seller. For you, it will be purchase returns. Clear? Okay? Goods returned. Goods returned to seller is termed as purchases returns. Okay? And 15th is your sales. Sales means the goods in which you trade, when sold, becomes your sales. Here also you will include both cash sales as well as credit sales. So sales means cash sales plus credit sales. Clear? Simple. Now 16th is sales return. You have sold the goods to your buyer, but due to any reason, when the goods are received back at your end, it will be your sales return because the sales has come back, okay, in the form of goods. So, goods returned back by purchaser. For one party it will be a purchase return, for the other party it will be a sales return. For example, I sold goods worth 1 lakh to you. So my sales was 1 lakh and your purchases was 1 lakh. But out of that you returned me goods worth 20,000. So for you it will be purchase returns. For me it will be sales return. Okay? Simple. Now we move on further. Goods. Goods are the items of trade of the any business. For example, you deal in grains, so grains will be goods for you. And if you are a stationer, stationery items will be your goods. If you are having a shop of computers, you deals in computers, computers will be goods for you. Okay, so we can define goods as items of trade of a business. Okay, then now next is stock, or it is also known as inventory. Stock means, as the name suggests, the items, the goods which are lying unsold at a particular time, that will be your stock, or it is also known by the name inventory. Okay, for example, goods worth 10,000 is lying at your end. That means 10,000 will be the stock. Okay, and inventory or stock can be of 3 types. You can have a stock of raw material. If you are a manufacturer, in that case you have to buy goods in the form of raw material. So whatever stock, whatever the unsold item remains at your end will be your stock of raw material. Okay. Secondly, it can be work in progress. There may be certain items which are not in the form of raw material, and similarly they are not the final product. They are somewhere in between. They are in between the process of getting it converted into final goods. So such goods are known as work in progress. So you may have a stock of work in progress. Okay? And third one is finished goods. When the raw material, after having gone through this, it will become finished goods. So all the goods are not sold at a time. So whatever the stock lying at your end will be inventory of finished goods. Okay? Clear? And there may be, these are applicable only in case of manufacturing units. But in case of trading concern and as well as in manufacturing unit, finished goods will be common. Okay? So we move on further. Trade receivable. Trade receivable includes both trade debtors plus bills receivable. whenever you sell goods on credit, so the buyers who buys goods from you on credit will be your debtors. Okay, I have told earlier also. And bill receivable means when your debtor gives acceptance to bills of exchange, it becomes BR, bills receivable. So trade receivables will include both trade debtors and bills receivable. Okay. So trade receivables will arise only on credit sales. Clear? So we move on. Trade payables. Opposite of trade receivable is trade payable. Similarly, whenever you enter into credit purchases, then you have to pay at a later stage. So you will be creditors, trade creditors plus bills payable. When the goods are purchased on credit, you become debtor, and the firm or the person to whom you have to pay will be your creditor. And when you accept bills of exchange, it will be a bills payable for you, and both are your liabilities. Okay. Next is voucher. Voucher means evidence of transaction. It can be in the form of receipt, it can be in the form of debit note, it can be in the form of credit note, it can be in the form of invoice. Okay? Evidence of transaction. Okay? Now we move on. Next, discount. When you have to pay lesser amount to your seller, it will be a discount. Okay? Similarly, when your buyer pays you lesser amount, it is discount. Clear? Discount can be cash discount or it can be trade discount. Trade discount means when, as a general practice, discount is allowed, it becomes trade discount. When the goods are not sold on MRP. Clear? And when trade discount is allowed, the accounting entry is recorded with the net value, that is sales minus trade discount. For example, you have sold goods for 1 lakh and allowed a discount of 10%. In that case, 10% of 1 lakh is 10,000. So you will record your sales at 90,000, not with 1 lakh. Okay? And cash discount is when you want to receive the payment in time and you allow a discount to your buyer to be, so that you can get the money, due money in time. That is cash discount. Okay? Cash discount is shown as an expense if you have allowed. Similarly, when your purchaser allows you discount, it will be an income for you but an expense for that party. Clear?